Hello, hello, hello. Happy May and April showers bring May flowers or maybe more rain here in Indianapolis, but that's okay. Stephanie Evelo here, owner of the Evelo team at Keller Realty, and I've got our realtor senior partner, Bob Warner, our research specialist on our team. Bob, how long have you been with our team and how long have you been doing this now?
13 years with the team, and I think we started these monthly market updates back in March or April of 2020, I believe.
So I just want to say how much we appreciate your persistence and consistency because I know that yes, lots of clients and friends look forward to seeing and hearing this information and getting this data so that it can help them make informed buying and selling decisions. So, Bob, start us out. What did it look like for March or for April?
Yeah, let's just kick straight into things. We've been doing this for a while, so we go over a lot of the same sets of information. But first up is that median sales price. So we ended April at 310,500, which was up just a little bit under 2% from last year. And then next is that cumulative days on market. So we ended April at 17. That is up a little over 21% from last year. But what I found real interesting is it was like down like 50% from last month. So, but you can see we see those spikes each year. So we're sort of following those tendencies that we have. Next up is that month supply of inventory. So again, generally speaking, a balanced market is about a 4 to 5 month supply of inventory. So we're still under that, but obviously far different from what we were 2, 3, 4 years ago. So we ended the month at 2.1 month supply of inventory, which was up nearly 19% from last year. And then the last one in this initial batch of information here is the average list to sales price ratio. So again, that's another one we saw creep up this month, but flat over last year. So we ended April at 98.5%. So that means on average, all the homes in our market were selling for 98.5% of list price.
Sure. Wow. Thank you so much for that data. Yeah, it is interesting because we've come out of such a time where everyone was expecting that you've got to pay full asking price and at 100%. But yeah, the market really kind of has hit a peak and is starting to trend just slightly a little bit less. And obviously, it all depends on where they start, right? It's all relative where they start their asking price out at. So well, what else? What additional items have been following to track the shifting market conditions? I know you've
Yeah,
got
so
lots.
just as things kind of shifted out of the craziness of the pandemic era from 2020 to 2023, we started tracking a few other things just because they sort of point to the changing market conditions. That first one up is the active inventory. So we ended April at 6,041 units. That was up 20% over last year. Next up is closed sales. So we're actually still closing more sales on a year over year basis, just under 3,000 units, which was up just a little over 1% from last year. The number of new listings, we ended the month at 4,539. So that was up a little over 13% year over year. And then we look at that average list to sales price ratio, but we also like to look at the percent of listings that closed over list price. Because as we talk about probably ad nauseum a little bit, real estate is very hyper local. So, what might happen in one county or one town or one area of town could be very different from even a neighboring neighborhood or community. But 17% of the homes sold for over list price in April.
Yeah, yeah. It is interesting that here 5 years later, right? 5, 6 plus years later, we're still having over asking. Yeah, it's kind of crazy in different price points, and that's why yeah, I think it would be very beneficial for someone to check out like what is going on in each individual neighborhood, like you said, because or different price ranges, because we're seeing some real different trends and some different price points. So yeah, what about interest rates? What's going on there? What's happening
Yeah,
with
so interest rates versus this time last month, they're other than being exactly flat, they're as close as you can be. When we presented last month, the 30-year fixed rate mortgage rate was 6.37, and we ended yesterday, actually, the status from yesterday at 6.36. So just really almost exactly the same. We've been hanging out in that sort of 6 6.2 range for several weeks now. We had obviously dipped down to the sixes for several weeks at the beginning of the year, then sort of went back up a bit as some activities around the world were impacting interest rates some, and we seem to have settled in this 6.25 to 6.4, 6.5 range for a few weeks now. And so we'll continue to monitor that as we do and see where things shake out over the next month.
Wow. Yeah, good to see that it's at least trending just with everything else that's happening around us. So any final thoughts?
Yeah, I just brought up this one today. I know I follow the news maybe a little bit more than some people, but this certainly hit the news cycles both locally and nationally recently, and that was just pulling some data that the number of foreclosure filings had gone up. And while they certainly have gone up, I wanted to share this chart with us for a couple different reasons. It's nowhere near where it was in the crash from 2008 to 2011. You'll sort of see that in the middle here, where those filings were well above 600,000 and approached a million every year for that 4 year period, where now we're down near 100,000. So, and then if you just sort of look at this historically, this basically is tracking the last 20 years. So we're still right at or below 100,000. And that's actually other than the years of the pandemic in the crazy market from 2020 to 2023, we really are in line exactly where that has been and even below where we've been in the last decade. So while it's important and while it's relative, the number of filings definitely went up, but we just want to make sure people aren't in panic mode and think we are going to be here from 2008 to 2011, because as you can see, we're almost a million foreclosure filings less per month than what
Yeah,
we were during that housing collapse.
yeah, thank you for putting that in perspective, because that's what people keep asking and thinking, right? That we're back in those days and times, and yeah, we're nowhere near that. Yeah, well, thank you so much. Thanks so much for joining us. And if you have any real estate questions, concerns, comments, want to find out how much your home might be worth, value, current value now in today's market, please reach out to us. Anyone at the Evelo team would be happy to help. And we'll share our contact information here below. But you can always reach out to eveloteam.com, visit our website, eveloteam.com, or call us at email info@eveloteam.com, or call us at 317-863-9011. And as always, remember, make each moment count. Thanks again, Bob.
Indeed.
Bye-bye.